Hi, everybody. Thanks for joining. Before we get started, I want to ask everybody to hit subscribe to my channel to make sure you keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen right now for a special offer from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now. All right, so we're going to talk about Redfin, which a lot of people are kind of surprised that I've bought recently because I'm generally a conservative investor when it comes to my larger positions. I'm a certified financial planner. I like to take a very kind of measured approach to my long term returns. My biggest holdings are things like real estate investment trusts, blue chip stocks. Berkshire Hathaway is one of my top investments. So Redfin is I see it as a very binary outcome. It could go to 0 if things go wrong, but it could be a home run if things go really well. So this is not financial advice. Don't invest anything in Redfin you can't afford to lose. Having said that, Redfin has been beaten down. It's at an all-time low. It's trading for a $450 million market cap as I'm recording this. So it could 10x and still be a sub $5 billion company. It's gotten that small. So there are a lot of things that make me love Redfin as a company. One, it's a very innovative business. Not only does it have the best real estate app in the business, in my opinion, but it has a lot of it's the only company that's really willing to disrupt on price. The real estate commission structure is probably the most in need of disruption fee in the entire market. The standard real estate commission when you sell a home of 6% has been in place for decades and decades. And with technological advances, there's honestly no need that it should be that high. Sorry to any real estate agents listening. Redfin is the only big disruptor that's cutting down on pricing. So Redfin has great customer loyalty. It's really building out an all-in-one approach. It acquired a mortgage producer. The timing couldn't have been worse on that, but it acquired a major mortgage company to kind of add to its ecosystem. It acquired Rent.com, which has Rent Path, Apartment Guide, a bunch of different rental businesses to kind of bring rental into the to its ecosystem. And it has a lot of financial flexibility to weather the tough times. Uh, Redfin currently has about $463 million in cash on its balance sheet. It has another almost $400 million of inventory. But there's a lot that could go wrong and a lot that is going wrong right now. The real estate market is a tough environment right now. Mortgage rates have more than doubled in 2022, sitting around 7% as I write this. July through September of 2022 has been the most volatile period for mortgage rates, meaning just going up and down, since 1987. Now, mortgage rates could ease if inflation cools off, which hopefully it will in the not too distant future. Right now, refinancing is almost non existent. So that's not great for the mortgage business they just acquired. And it's really keeping a lot of buyers and sellers out of the market. Just to kind of name a couple statistics, Google searches for houses for sale are down 33% from where they were a year ago. Home tour traffic is down 26% from a year ago. Recession could make this even worse. There are also too many real estate agents right now. That's another problem, and it's not a good fit when there are more real estate agents in the United States right now than there are homes for sale. And Redfin is not a profitable business right now. It's losing money very fast. It lost $78 million in the second quarter. It is expecting a similar loss in the third quarter. And remember, this is just a 400 or $450 million market cap company. Those are some big losses, and they are not sustainable over the long term. So I'll be watching this very carefully over the next few quarters. I want to see them really get the losses under control. Redfin recently announced an unfortunate round of layoffs in order to kind of reposition its business. And we'll see if that's enough to kind of right the ship and get it through to the other side of this. But there's a lot that can go wrong. That cash stockpile could dwindle very quickly in the wrong circumstances. Redfin could be a 10x or even a 100x performer if things go right, but that's a very big if at this point. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.